Amongst them would be a word from the chairman. I'm going to give all of us a brief background to the chairman, Dr. Muhammad Al-Ghari. He's the chairman of the Sharia Supervisory Board of Hanover Takaful. He holds a PhD in economics from the University of California and is a professor of Islamic economics and the former director of the Center for Research in Islamic Economics at King Abdul Aziz University in Saudi Arabia. Dr. Al-Ghari is an advisor to many Islamic financial institutes around the world, and is a Sharia board member of the Dow Jones Islamic Index, as well as a Sharia board member of IOFI. Unfortunately, Dr. Al-Ghari isn't enjoying the best of health this morning and is not here with us, but in his absence, we're going to call upon Brother Ahmed Akub to give us a word from the chairman of the Sharia Supervisory Board. On behalf of Dr. Al-Ghari, I call on Ahmed Akub.
Bismillahir Rahmanir Rahim. Ya Rabbi bil Mustafa balligh maqasidana waghfir lana ma mataya wasi al-karami. Mula ya salli wa sallim daiman abadan ala habibika khairil khalqi kullihim. Wa qala Allah ta'ala fi shani habib. Inna Allah wa malaikatahu yusalluna ala an-nabi. Ya ayyuhalladhina amanu sallu alayhi wa sallimu taslima. Allahumma salli ala sayyidina wa maulana Muhammad wa ala ali sayyidina wa maulana Muhammad wa barik wa sallim. التحيات لله والصلوات والطيبات السلام عليك أيها النبي ورحمة الله وبركاته السلام علينا وعلى عباد الله الصالحين شهدت أن لا إله إلا الله شهدت أن محمد رسول الله بسم الله والسلام على رسول الله. We begin and greet you in the name of Allah, most gracious, most merciful. Thank you to the organizers, to Muhammad, for the opportunity to speak on behalf of Dr. Muhammad Ali Al-Ghari. I'm not involved in Takaful at all, so I will not be taking any questions. Just, if I may just briefly digress. So I'm not involved in Takaful at all. I'm just here to read the document that the organizers have asked me to read on behalf of Dr. Al-Ghari, and it's a distinct privilege for me to be able to do that. I've heard his name many times in my household through Muhammad. I'd just like to share a memory with you about the Takaful. So I like to think of myself as a nurse who was not involved, who saw the birth of the Takaful here in South Africa from the side, as an assistant nurse, not even the midwife, just a nurse who was watching what was happening and saw the birth of the Takaful. I remember when the Takaful was being birthed here in South Africa. My brother Muhammad and Uwais were like two kids tinkering with the BMW. The car's perfect, but they were tinkering with it as if this car, there's something wrong with it. It needs to be better than a BMW. So every day I'd see Muhammad coming home with heaps of paper and heaps of files. And like the angels, he'd say to me, read, Iqra. And out of duty to big brother, I would read, but of course it was way above over the top of my head. So I have these reams of files at home on Takaful 101. If anybody wants them, my wife would be happy to empty my shelves. So Muhammad and Uwais were tinkering with this very perfectly good BMW, and it was an immense struggle. Giving birth to Takaful, and I saw I saw the beginnings of it. So they were like two backyard mechanics. And now that BMW, I think, is a Formula One Ferrari. And I think when Muhammad retires, he's going to give you guys that Ferrari and say, now you tinker with this and make it even better than the Ferrari. So basically that's what Takaful is. It is a jihad that you're waging. It is an immense struggle that you're waging to bring Islamic economics to the world. It's not just about Takaful. For me, I see it as changing the entire Western economic system that you are working with. You're just dealing with one sector of it, which is Takaful, which is alhamdulillah, it's evolved beautifully. And now you're called upon to change an entire system. As I was saying to Mufti Hamidi on the table, can you imagine a world without riba, without interest, which is an oppressive system. Can you imagine? So reimagine a world without riba. And Takaful, you've dealt with it, now deal with this so that you can change the entire economic model. And that is your challenge going forward. There's a name you should remember. I'm not sure if you know. Does the name Stephen Sesson ring a bell with anybody? No? Okay. Stephen Sesson was the Uwais Jasat of photography. He's the guy who went to his boss and said, he's the boss. He went to Kodak. He was working for Kodak. He was a little engineer in Kodak. And he went to them with the idea of printing pictures so that you can share them digitally. And I think his boss at the time told him, that's a cute idea, now go away and go back to work. So fortunately for you guys, Muhammad and Hanoveri did not say that to Uwais, and that's why we are all here today, where Takaful is at such a leading edge, okay? So if anybody comes to your office with any young millennial comes to your office with a cute idea, please don't change them away, especially when it comes to Islamic finance. So with that, may I read to you Dr. Alghari's paper. Brothers and sisters, Assalamu alaikum. It is indeed a great pleasure and honor to address you this morning. I thank the organizers for making this possible. Insurance is one of the most momentous inventions in the history of the human race. It is nothing but a formalization of the essence of communal living and cooperation, which makes people living together as a society possible. Individuals face a lot of perils in their life. Some could be devastating to their health or standards of living. If people face them together, the impact will be tolerable. This is what insurance does. Whether Islamic, mutual, or commercial, insurance is cooperative in nature. In our Islamic way of life, which is built on the tenets of Sharia, cooperation is but a bedrock of social peace and blissful life. In the realm of risk sharing, which is the spirit of insurance, we find many Sharia rules, the purpose of which is essentially cooperative in nature. One of the risks faced by individuals in the old days is causing unintended death or to another, whether blood money need to be paid to the family of the victim. Such payments can be devastating to the payer who eventually intended no harm. Sharia rules are clear. This risk is distributed to his tribe, extended family, or even his co-workers. Takaful, or Islamic insurance, finds its roots in these glorious edicts of Sharia. Now that Islamic insurance has reinvented the wheel, in fact, it delivers the same economic outcome of conventional insurance. It remains, however, different. The difference is the modus operandi. Rather than making risk itself the subject of an exchange contract, Islamic insurance brings back insurance to its true spirit, which is cooperation. The Takaful model is based on the idea that a group of people cooperate to help each other in case one or more are exposed to a peril, thus reduce the impact of financial loss. The role of the Takaful company is simply to manage the program and keep the contributions to the pool in its custody for the collective good of the participants, and it does that against a fee. The problem with commercial insurance is that the subject of the contract is replete with gharar. Gharar means the contract is uncertain, meaning the two parties are not certain that each will get what they are entitled to. One party pays a price, but not sure if she or he will get anything against it because it hinges on the occurrence of an incident that is not under the control of either. Our Prophet Muhammad sallallahu alaihi wasallam prohibited any exchange contract of such nature. Hence, such contract is void. It is the consensus of Sharia scholars that non-exchange contracts may not be voided by uncertainty. Takaful and insurance is related to uncertain outcome, as no one knows what will happen in the future. However, once out of the realm of exchange contract, such qarar will not void the contract. To some people, the difference between takaful and conventional insurance is minor and unimportant. But to us Muslims, it is the difference between halal and haram. Obedience to Allah requires we should avoid haram. And haram is determined by the rules of Sharia, which clearly prohibits gharar. So, Muslims developed the structure which delivers the risk cover within halal. Since the inception of the first Takaful company in the early 70s, Takaful is growing and attracting more and more participants. Now, re-Takaful is also a sizable and growing industry. Globally, the halal industry is growing, not only in meat and poultry, but also in insurance and banking. Being a country with a very high penetration rate, South Africa is the right place for Takaful, not only to flourish, but also to benefit from the long experience and innovative talent. I hope we will meet one day where South Africa, with its great Muslim community, is leading the world in this industry. Under the leadership of one Muslim South African, Hanover Takaful was built from nothing to the best Takaful company in the whole wide world. I think we all know that individual. Wassalamu alaikum wa rahmatullahi wa barakatuh. Thank you.
Brother Muhammad Akub, the Managing Director of Hanover Takaful, started his career as early as 1976 at Munich Reinsurance Company of Africa in different capacities, including 6 years as the General Manager. He's one of the major contributors to the Takaful industry. Brother Muhammad Akub joined Hanover Re in 2002 and served as the Executive Director and Chief Financial Officer of Hanover Re's subsidiary in South Africa. He was one of the pioneers in introducing Takaful in the region, as we've heard in numerous presentations this morning. He played an instrumental role in establishing Hanover Takaful in Bahrain in 2006 and promoting and developing the international Takaful and Takaful industry. As mentioned previously, he has successfully guided the company to become the leader in Takaful business worldwide and be the first choice for Sharia-compliant insurance companies by offering world-class standards in products and services. His and the company's contribution and innovation to Takaful and Islamic finance have been recognized by numerous industry societies and events, and the company has received numerous awards. We call on Brother Muhammad Akub to give us an overview of Hanover Takaful and the global Takaful market.
Bismillahir Rahmanir Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Mr. Chairman, respected ulama, guests from abroad, guests from South Africa, ladies and gentlemen and dear friends, if I look across the room today, there are so many faces that I know. I'm perhaps a bit overwhelmed this morning. It's because these are the faces that I have interacted with over the number of years, and today we bring them all together, inshallah, to have this as a footprint and perhaps the foundations of a new dynamism in the field of Islamic finance. I think a lot has been said by our respected ulama this morning, also in the absence of our eminent Sheikh Dr. Al-Ghari, who asked me personally to extend his heartfelt, sincere apologies that he had not made it. He actually had turned back from the airport in Jeddah. Unfortunately, as Allah wills, that's what has happened, and he is definitely a huge proponent and a huge giant in the Islamic field on a worldwide basis. Under his leadership and under the leadership of the ulama that I've worked with here in South Africa, and also currently the ulama who've assisted me tremendously in this development. It's been a long, hard grind, but alhamdulillah, we are succeeding. I would like to name the international ulama that have assisted me and us, and starting from across the table, Sheikh Manju, Faisal Manju. I have to say, last week he has been accorded a doctorate in Islamic studies, and alhamdulillah, we wish him well on this. And he is a true South African boyki as well, so let's not forget that. On my right side, we have Sheikh Mufti Kalim Hassan from Pakistan, a student of Sheikh Mufti Taqi Usmani, and he was with us, and he is with us here today. Mufti Hamidi, Abdul Nabi Hamidi, he was one of our first Sharia board members, and of course, Dr. Al-Ghari. So, with that as background, I will just give you a short presentation of what we have been doing in Hanover Takaful. The subject I put as seedling to a tree. I will, during the course of this presentation, explain what the seedling to a tree means. I'm not yet to talk about Hanover, but I think it's axiomatic that I have to just put it or place it into perspective as to what this organization is about. The company that we are employed by is called Hanover. It was founded in Germany by a company called HDI, and my friend Adam could translate that in German, but it means an industrial insurer. But what is important is not that it was funded by HDI. It was established by a number of mutual companies in Germany. Hence, the mutuality, although it was on the conventional side, is something which is symbiotic with Takaful in terms of its invention. In 1990, we established Life and Health, and in 1994, we went public. We have 140 subsidiaries worldwide on a worldwide basis. We employ about 3,300 employees, and we are the fourth largest reinsurer in the world. Just a further plug, but we are the most profitable on a worldwide basis. Where do we fit in as the Takaful? As I've mentioned, we are owned 100% by Hanover in Germany. They have 100 subsidiaries in various countries, and I'm proud to say we are only one of 10 subsidiaries of that group as Hanover Takaful. The group took a decision to have that as a subsidiary. Subsequently, we established 2 branches ourselves in Labuan, which is a city or a state in Malaysia. We did that primarily to service the Southeast Asian business. Now, we talked about this morning, and yeah, that's the right one. I thought it's prudent to mention this. The halal industry is estimated to be at US dollars 5.7 trillion in 2016. This incorporates financial services, food, finance, business, halal branded. The share of Takaful is less than 0.5, but that's not the point. The question I put is that why is it that we do not eat anything but halal, but are open to other options for our risk management needs? It's just a question that we need to think and ponder about. $5.7 trillion. That's huge. I don't even know how many notes that will add up. But also importantly, it's an ethical product. It appeals to all aspects of communities and societies. But even if we just take it to the Islamic community, we are 25% of the world population. And in terms of insurance, it's a young population, which lends itself for huge development. Hannover Re is one of the top reinsurers, as I've mentioned. We are number 4 in the world, and we have a gross written premium of $21 billion for the year 2017. Financial strength ratings, these are important in the financial world. Hannover Re is a AA- from Standard & Poor's, and AM Best A+. That's one of the highest ratings. The top rating could be AA+. There are no AAA available. I'm not going to make the analogy, but you can well imagine a AA- rating is probably larger than many countries that we are aware of in terms of S&P ratings. Global Takaful contributions. These figures have been estimated to a large extent by ourselves, so I cannot vouch for its veracity. But at the end of the day, the old ones are okay. There are, unfortunately, no official statistics on this issue, so we have to do some assumptions. But it started around $31 billion in 2012, and the projections on year-on-year double-digit growth, we've seen that, and we think that around the 2018 mark, it'll be around $54 billion and growing. So you can already see that it's a sizable portion of the world economic scenarios. Total assets under management, we can see that in the GCC, the Gulf Cooperation Councils, it's about $19 billion. Other MENA, Middle East, North Africa, 11 billion. Southeast Asia, around 10 billion. Even South Africa makes the graph at 1 billion. So it's there. We're in. And we heard this morning, size in this case doesn't matter. It's pioneering that matters. And we have been in the forefront of that pioneering. And we should, inshallah, particularly with the youth that we have, the enthusiasm that we have for Islamic finance here in South Africa, there is no doubt that we can still lead the way. Major Takaful market contributions. In the Gulf Cooperation Council markets in Malaysia, it's around 13 billion. Thereof, the UAE is around 1 billion, Qatar 300 million, Kuwait under 200 million, and then Malaysia, it's 1.4. If you look at the whole lot, 75% of the contributions in the GCC market comes from Saudi Arabia, which has about 9.7. One of the other areas that is not on this list is Iran. Iran has a huge contribution of the order of over 2 billion. I started my presentation with a slide on sowing the seeds, and here's the answer. The seed that we developed was here in Johannesburg and Durban and Cape Town. Those were the seeds of the development for Takaful. That was in the years 2002, 2003, together with Uwais, our leading ulama here in South Africa, myself, we did the homework, and as my dear brother said this morning, we tried to tinker with the BMW. That was the raw beginnings, and just to digress, we heard this morning from learned ulama about the Waqf model, and guess what? Surprise, surprise, when I got to Bahrain, I looked at the legislation in Bahrain from the Central Bank of Bahrain, and we are indeed in the regulations as the first country to do the Waqf model. So that's in the country regulations as well. Okay. In 2002, 2003, I was working for Hanover as an executive director. Uwais was a colleague of mine, and we sat together and we started establishing the figments of our imagination and translate that into real business. So in 2003, we established Takaful South Africa. There's a history to the Takaful, as our chairman has said, and the Takaful, but I'll leave it during the break for Uwais to explain what happened there. You know, there's some issues like patents and rights and etc., etc. It's a long story, but he'll give you the story. So we established that with the princely sum of 250,000 rand. That's what the investment was. Hanover 51%, our Muslim community 49%, and we established that. Not lots of money, but what did that do? It allowed us to tinker and play and understand the dynamics of Takaful. After that, in 2005, I decided maybe it's time that we should do this internationally. I did a feasibility study with the help of Uwais and a few other friends. And I went to the Hanover board in Germany, executive board, with the presentation, which was a 2-hour presentation about Takaful. And let me at this outset say, there was no Takaful at that time, and therefore it was very difficult to even put up a position paper. But after 2 hours, and knowing how the boards work, I thought, what capital should I ask for? So I said, I'll ask for $20 million, and I know how they work. They'll probably cut me down, if they agree, to 10. Then the board asked, excused myself, and I sat next door, and they discussed it for 45 minutes. Came back, and they said, Mr. Akub, okay, we see this issue, we like what you're saying, but we have a problem. $20 million is something we want to talk about. Okay, so I immediately knew now maybe the 10 is coming. They said, what we think is that you've got the toy, so we'll give you $60 million. That's what they did. 60 million, not authorized, issued capital. Okay. I couldn't believe it, but that's what it was. $60 million, came back to South Africa, packed up, and I needed somebody to help me hold that $60 million. Yes, so I could do it, do the business side, but the money side was too much. So we had a lady who was working with me in South Africa, and I went to the board and I said, it's one condition, give me the 60 million, but I want a lady who's sitting in this room right at the back, and her name is Rita. She's a true Afrikaans Macy. And I said, go and learn everything about Islamic finance and come and join me in 2 months' time. So she's looked after the investment, and so far the $60 million that was let's just say endowed to us, today not 1 cent of that has been utilized. In other words, we've grown it, but it's intact. That at that time was 735 million rand. That's what they gave, and really, I think it was a faith in, a leap in confidence and faith, and now I'm going to say they took excessive qarar because it was really, really big money. But the story doesn't start there. We took the money. I went to Bahrain. I talked to the Central Bank of Bahrain, sent the application, and it was near Ramadan in 2006, October. And I said, but you don't work in Ramadan here in the Middle East. I need my license. So they said, we'll give it to you. So alhamdulillah, we got our license in Ramadan 2006, which happened to coincide with the 8th of October in Germany, which is the independence or unification day rather. So there was some significance in that date. So that's how it started. And then they said, but you need a Sharia board. Okay. You mean regulatory? Yes. Okay. So then I contacted firstly Mufti Hamidi, who was here with us today, Mufti Kalim, Sheikh Manju, Dr. Elgari, and we had our first meeting. And they said, now where's your Sharia governance document, your Sharia standards, your documents all approved? I said, yeah, I've got a reinsurance contract. I know it backwards. I've done it. I know I can relate to you. No. You have to have this all approved. And as Mufti Kalim will vouch to this, I said, so what do? I said, sure, I close this office, take the $60 million, give it back to Germany. I go back to South Africa, and then we forget about it. And Mufti Kalim, as magnanimous as he is, said, no. We will start at the beginning. We will make this work. Shukran. That's what we have done. So you can see that it's not easy stuff. There was no textbooks. The Takaful 101 that I gave my dear brother, it's only Takaful. There was nothing on Takaful. So we had to reinvent actually all the products, all the concepts. Of course, we took heed of all the Sharia concepts, and we got off board and established in October 2006, and January 2007 we were live. The sabotage works again? Yeah, okay. Where are we today? The world market position, Hanover Takaful is number one worldwide. Okay. In terms of core Takaful operations, we are number one. Our gross contributions last year was 2.4 billion rand. We are active in 20 countries. We have partners with 150 seeding companies that are Takaful companies, and we are handling over 2,000 active treaties. Our staff of 48. 5 of our staff are here today, and during the breaks, please, they will introduce you to them, and they will tell you the groundwork that had gone into this development. We are rated A+ by S&P. This was important too. It's the only Takaful that has an A+ rating to be able to do the business, because we do severity business, we do earthquakes, we do cyclones, we do airlines, and those need huge capital and huge money, huge expertise. Our consistent growth since 2006, we started 2008, I beg you, so we had 609 million rands, and it grew. Today, in 2017, we closed at 2.5 billion. Our investments. We took the decision to ensure the strict Sharia board that we have, not to trouble them on cleaning investments. So we decided we're going into sukuks. Sukuks are the equivalent of bonds, okay? And you'll notice on the left-hand side, issuing countries, it's Saudi Arabia, the UAE, Malaysia, Indonesia, Saudi Arabia. Unfortunately, South Africa is there, but it's so small that it gets lost in translation. And a bit of a story on that one. I was on the board of the South African Reserve Bank here in South Africa, and in discussions during that time, I mooted the idea, alhamdulillah, why don't we do a sukuk here in South Africa? At that time, I spoke to the governor of Central Bank. She was Jill Marcus, and she said, talk to Treasury, and then we talked to Treasury and Traction. And a few years later, we had the first South African sukuk of $500 million. So that has the imprint of ourselves here as well. So alhamdulillah, that one was fully subscribed, and it was paid off as well. So we have not invested in any equities, only in sukuks, and each and every sukuk that we have has the Sharia compliance of the country in which they are, but that's not enough for us. Our Sharia board has ticked off each and every one. And there are many sukuks which are debt-related, debt for debt, and those we don't even do. Although certain countries allow these in terms of the Sharia, we took the decision not to have them. We had our Sharia board, alhamdulillah, last night, and the Sharia board, once again, for the year 2018, gave us a clean bill of health. They checked we voluntarily also do an internal audit from an external company to audit all our aspects, and we have done that last night. Shukran to our board as well. It's not all about growth. We also have to pay losses. If you see the list across there, you will find some substantial losses. I've omitted the names of exactly of the losses for confidentiality reasons, but generically we've had floods in Saudi Arabia. For our share, we paid 86 million rand. If you go down the list, you have a ceramic marble company, 940 million. And recently in 18, it was 91 million, and Jeddah and Al Khubr floods, 857 million for our share. Now you can well imagine, these are big numbers. And we have to digest that, we have to put that in our pool, we have to make sure that the pool is sound enough to be able to pay these claims. And then we have to have money to give a card hasan in the case that the pool is not sufficient. And I can assure you, the cards have been paid, and we also recover them after a while. Our Sharia board looks at these documents in detail so that to ensure that we do it correctly. It's a difficult business, high severity, low frequency business can be extremely difficult if we don't understand the business. We pride ourselves in having top experts in the organization who understand risk so that we can manage that. Our expectations, inshallah, is for strong growth going into the future. And for 2019, we think it's 2.6, probably 2.7 billion, and we want to target 3.3 million. I retire in June, and I told our team 3.3 is too short. So I'm leaving a challenge for them. I think our eminent MC has talked about this, but alhamdulillah, on a worldwide basis, we've swooped most, if not all, of the awards in terms of what is available. And we don't pay for these. We do what has to be done. Importantly, we do it Sharia compliant, and we manage our risk, and the market sees what we're doing. Alhamdulillah, that is my story. And I hope it's very short, but I hope it gives you some insight into the world of Takaful. Shukran. Alhamdulillah.
Brothers and sisters, ladies and gentlemen, the next item on this day's itinerary is arguably the item that we've all gathered here for today. That's the launch of the Group Family Takaful product. For this, I call on none other than Hania Abdul Jalil, Senior Manager, Family and Health at Hanover Takaful. With more than a decade of experience in the Takaful industry, Hania has managed a profitable portfolio of the family Takaful business at Hanover Takaful. During this period, she was involved in pricing, underwriting, product development, client management, and training. Hania holds a master's degree in insurance and risk management and is an associate of the Chartered Insurance Institute, in addition to her bachelor's degree in actuarial science. We call her Hania.
Assalamu alaikum wa rahmatullahi wa barakatuh. Before I start, since we have a lot of ulamas, mashallah, and asatidha, and the Muslim community representatives, I would say, are all here, I'll be greedy to ask you for sadaqah. And the sadaqah I'll ask is al-ibtisama fi wajhi akhika sadaqah. So I'd like to see you all smiling to make it easier on me presenting today, please. Today I'll be talking about family takaful and micro takaful. But before I start, and since we had a lot of talk about takaful in general, I would like to actually talk about what is takaful, but not what's takaful as an Islamic insurance. Takaful as a meaning. What is an act of takaful? It's important always to go back to basics, to the essence of the meaning, and not get caught up with the technicalities. I thought the best way to think of what's takaful is actually to think of the opposite of takaful. What does the lack of takaful look like? The opposite of takaful look like? And I came across this picture on the internet that actually was a perfect example of how opposite of takaful look like. If we live in a society that does not believe in takaful, this is what will happen, and it happens. These days, people have their own goals, their own ambitions, and they're just running, thinking about themselves. And when they find someone in need, they might just walk by, and even the most extreme case, they will just take a picture, and they will not extend a hand for help. And takaful is actually all about extending a hand for help. Another picture I came across on the internet, which is again very interesting. I'm sure you're all aware of the musical chairs game. You know, kids have chairs, once the music is on, they run around, and whomever is standing loses. And a chair is pulled out until one person wins, and there is one chair. And I came across a very nice and interesting twist of the musical chairs, and funnily enough, they call it cooperative musical chairs. I'd like to call it takaful musical chairs, where the kids are taught that in order to win, you must all be sitting. So you have to find a way to help each other and find a place for one another, even if the number of chairs are not adequate. And I can't find the perfect example of takaful as a meaning more than that. So takaful, as you know, now is an Islamic form of insurance. It complies with the insurance law. It's all based on mutual assistance, solidarity, sharing responsibility. And I think naming takaful, so naming Islamic insurance takaful is perfect, because the meaning is there. And that's why takaful is actually, as a model, is so important. So if we look just briefly about the principles of takaful, takaful is based on risk sharing. So it's not a transfer. There's no risk transfer. It's people coming together deciding that they want to share their risk. They want to pay a contribution, a donation, tabarru'. In the conventional terms, it's a premium. And they pay it with the intent that I want to be protected, but I also want to help others. So it's all based on mutual guarantee. What's the role of the takaful operator? It's just the takaful manager. So it's the facilitator. Now you bring people together, you have this entity that actually manages that pool. They have the duty to ensure that this pool is always profitable, it's healthy, and this is where the takaful operator comes in. And also with the investments, it has to be Sharia compliant, we have a Sharia board. So all this actually constitutes or the basic principles of takaful. And I should not forget as well the surplus distribution. So that's as well our duty. If the surplus and the pool of donations are in surplus, we distribute this money back to our participants. So that's the basic takaful concept. If we move to family takaful in simple words is life insurance. So that's the equivalent. And again, I love to go and search a lot of photos. When you look for life insurance or family takaful online, this is the picture you'll get. A happy family raising their hands, they're smiling. It's either somewhere in a park or by the sea, and it gives this positive picture. While, you know, when you work in life insurance, you wonder, because the underlying risk is death, disability, critical illness, and you wonder what's happy about it. However, it's what family takaful as a product brings. It brings peace of mind. So all this father cares about is probably the mortgage he has to pay. He is worried about the financial obligation for his children. The mother is worried about critical illnesses. We all have financial obligations, and we cannot deny that it's one big part of our worries, and we tend to worry a lot. So that's what family takaful actually as a product brings. It gives you the financial protection. in addition to financial protection, it's actually, it could, if we add to that, we have the long-term savings and investments. So, family Takaful product gives financial protection to the family, like group life product, individual life product. It could cover a certain mortgage. In addition to that, there is the saving and investment element. So you could save for education plans, marriage plans, etc. It also provides periodic compensation in case of disability. So those are the main things that family Takaful provides. If we move further and we think of what are the products of family Takaful, I could easily just divide them to group and individual, just general separation. Individual family Takaful is mainly an individual policy. You go as a person and you ask for a policy that reflects your financial needs. You either have a loan, you either want to save for a future event, and then you have one policy under your name that is usually a long-term policy. So it could be a whole of life, it could be 9 years, 10 years. And usually such individual policies require medical underwriting. So as a Takaful operator, I need to make sure what's the contribution I'll be charging this person. So I'll ask him to go for some medicals. And the contribution is usually paid by the individuals. On the other hand, if we look at group family Takaful, group family Takaful is actually one policy covering a large number of people. So it's either employees of a company, members of an organization, members of a syndicate. So it's one policy issued by the name of either the employer or the organization, and it covers a large number of people. Usually such policy does not require medical underwriting for everyone. So it has the option to have something called free cover limit, which is a limit that covers maybe 90% or 95% of the group, and maybe the top 2 people can go for underwriting. A key element in the group family Takaful is that the contributions are paid by the employer or the organization or a certain fund set for that. And the cover is usually either a flat sum covered or it's linked to the individual's salary. Now, I remember when I first joined the Hanover Re 12 years ago, the first group life scheme was in Abu Dhabi. And it was for a huge bank. And I was honestly very thrilled because it was around a 4 million dirham premium contribution. And I was so proud for getting this deal. And 2 days after, I received the one death claim for a young guy on an accident which wiped out the whole premium. And I thought I'll be fired by then. But I remember Mr. Akub said, Hania, the person is dead, pay the money. Pay them because that's what we are there for. And that's when I learned that our job is not about how much contribution we write. It's all about giving back. It's that trust the person has given us when he was alive to pay them when they are gone. So moving from the group family product, we can see and discuss further micro Takaful. And micro Takaful, in essence, it's just like group family Takaful. So it's again a life insurance product. But what makes it different, it's basically that it's designed for households of low income. So it's for low income earners. And why is it this way? Because it's designed in a way to have a low sum covered and a low premium. So, and it's Sharia compliant, and it has to as well, it's always a key to cater for the needs of the individuals. Micro Takaful product, just like any group life product or individual, covers several perils. What kind of perils do we cover? Death due to any cause, accidental death, permanent total disability, permanent partial disability, critical illness, terminal illness. The list is big. The key in a micro insurance or micro takaful product is the simplicity of the product, because you want to distribute this product among large number of people, so it has to be simple. Now, since I am Palestinian Jordanian, so I am a bit biased, so the example I got was from Jordan. So this is an example of a micro insurance program. Basically, there's the Micro Fund for Women is a non-profit microfinancing program or a company that was established in 1996. And this fund was basically targeting women. So basically they wanted to empower women, to finance women with small business, finance women with some small projects, finance retired women and giving them ideas to start their own business. And today, this fund reaches 1 million women. So they have 1 million small businesses financed, and as they have the hashtag 1 million hero. And it's quite big and known in Jordan. So it actually helped women to start their own businesses and just have their own income. So where does micro takaful come in the picture now? So 1996, the fund was established. In 2006, actually, the fund decided that they actually need a protection on their books. Like any bank or financing company, they are running a risk of people not repaying them in case of death or disability. So a very basic credit life product was given to the micro fund for women, which covered just the loan. But you would ask then, where is the benefit for the beneficiaries? Yes, now they are not liable to pay the loan if they pass away, but there are more needs to the community. So the product started developing. The micro fund for women with the insurance company started researching what the client's needs, what those women need. And they started building up the product. So they started first with offering a hospitalization cost for the main policyholder, for the woman, and for the dependents, because they noticed that the women are not able to actually pay for the hospitals, especially if they are sick and their income, they have a loss of income. So the first layer was the hospitalization cost given to the policyholder and the dependents. And then they noticed, okay, when they're in the hospital, they're not running their business, they're losing that income. So they added another layer of cover, which is loss of income in case of hospitalization. Again, not only for the woman, so not the mother only, also her dependents, because if her dependents are in the hospital, they will not be able to run the business. As a third layer, and after research, they also found that women are worried that if they pass away, what will happen to the children? What will happen to this loss of income? And that's where, again, they added the group family takaful and the group micro takaful, which is the cost of care, a certain amount paid if the policyholder dies, and a funeral expenses. Another layer to that is, as well, they finally added compensation in case of the death of spouse, because they knew that women might stop working, or they will temporarily stop working until they pass this trauma of the spouse dying. So that's in a nutshell how the product works. If we examine this product closely to try to see what was the success factors in those products, we'll find those points. First, the product was reflecting the client's needs. So it wasn't just, okay, let's give this amount and offer it. No, it studied those women, their lives, their income, their financials, what do they need in their daily life. So it catered really well to their needs. Another important point was the simplicity of the product. And when I say the simplicity, it's first the simplicity of the terms and conditions, so it's easily understood to the mass, but as well the simplicity of enrollment. It's not complicated. I'm not going to give you 1,000 papers to sign. It's very easy. And the third and most important was the simplicity in the claims process. Because the reputation of Takaful or insurance in general, we take the money, we don't pay claims. And when we want to pay for claims, we ask so many questions. So this is actually addressed here. Another point is the affordability. So you cannot have a micro Takaful product that's not affordable to the low-income earners. In addition to that, the transparency. And the transparency was not only in the terms and conditions, it's between the policyholder or the micro fund for women in this case and the Takaful operator or the insurance company. The interests has to be aligned. There has to be an understanding and full transparency on what are we trying to achieve here in offering such a product. In addition to that, the flexibility of the product is very important. So this product, it's called Afiyatuna, by the way, which is like our health. It's not just, okay, this is the product and it's done. It was developed over the years. The more you know your client, the more you research, the more you talk to them, you understand what they need. So the product needs to be flexible for add-ons. Now, there is a point here, accessibility is also very important. So the micro fund for women, they have over 55 branches in the areas where their beneficiaries are. So it has to be easily accessible and in order to be successful. Now, and this brings me to the point of the high technology. It's very important nowadays to try to involve technology because it will help us spread the product easier, it will lower administrative cost, and actually it will address a lot of the challenges that are here on the screen, which is challenges when you offer a micro Takaful policy. So the lack of data is the biggest struggle. We don't have much data, so it's difficult to really give an accurate calculation of the contribution that has to be paid. So we have to work on the minimal data we have. Lack of awareness, the financial literacy. Usually low-income earners might not have the financial literacy to know this is what I need and I need to be protected. In addition to that, the high administrative cost relative to the transaction value. So the product is very low, sum covered, low premium or low contribution. So and the administrative cost could be very high, and that's a challenge. So and that's where technology can help to actually bring micro Takaful to scale. And again, difficulty to reach large client base. Again, tech can be a very good solution here. The fifth challenge would be absence of regulatory framework. Always, if there is a regulation in place, it helps a product to actually flourish. That basically brings me to the end of my presentation. Now we have this product, which you have the terms and conditions here and everything, where if you feel like you want to ask any question or you have any queries, and I would like to end with hadith for the Prophet Muhammad sallallahu alaihi wasallam. خير الناس أنفعهم للناس. The best of people are those that bring most benefit to the rest of mankind. Thank you so much.
The uncertainty is not removed. It is not eliminated, because the very nature of insurance and very nature of Takaful is all about uncertainty. Yeah, but it becomes, when it is based on Sharia compliant structure on Takaful, it becomes bearable and it becomes acceptable according to Sharia. Why there is this difference? Inshallah, I will cover this in my talk.
So the pricing of this product is based firstly on the mortality rates of the country. So we look at the population, because usually the low income earners are not the insured population. So we look at the general mortality of the country, and from that we do our assumptions and we price it.
So then affordability, how do you sort of factor that?
Because when we price for micro takaful, we actually target a high number of people, and that's why the law of large numbers brings the contribution down. So the contribution, because first the sum covered is low, so the contribution is quite low, in addition to the assumption that we will be targeting thousands, and that's where we can have the liberty to reduce even the contribution further. Yes.
And how long is the lead time from the claim to the payout?
Well, that's again one of the key points, that the claims process must be very robust. So it has to be once the claimant or the beneficiaries come and claim, it has to be within 1 week time. Now this depends on who's the entity handling, what's the procedure, and how successful is the product. But ideally, it should not take long, because then it defeats the purpose, because the amounts are low, and that's where the authority, as for the takaful operator, and sometimes the policyholder might be able to actually settle claims. So it depends on how the structure of the product is. So the life expectancy will be country specific. So it is specific to South Africa. And what we do is basically we have the WHO tables, and we have as well our expertise in the South African markets and the mortality tables that are actually used currently in the market, and that's where we, find a way in between. With regards to the mass, we look at minimum 1,000. So and then it could reach higher, but. For the product we're talking about, it's minimum 1,000 or 2,000. We start, because the product is yearly, so we actually monitor it and we see. So if it did not reach, because there are no guarantees, we cannot pull back. So we say what our assumptions are, what our ambitions. And then at the end of the year, if I find that we only sold 10 policies, for instance, then this is a red flag that maybe our distribution channels are not in order. Maybe we need to adjust the rate because we're not getting the numbers. But in general, we would actually tackle the problem because we want large number of people, so we need to know how to reach that number.
Two things we've done here. The first thing is that we want to embody the spirit of Takaful. And you're quite right, we have used mortality tables across the world, WHO, African mortality tables, South African mortality tables. But this does not guarantee, in a manner of speaking, that we will have the critical mass to be able to sustain this business. So, in principle and in line with Takaful, we at Hannover Takaful has set aside a certain amount of funds for the eventuality where we do not reach critical mass and we have a flood of claims. So that is there. And just to add, our capital that we have, and it's very sizable, is placed at the disposal of this pool. Okay. I have to stress that fundamentally we are not looking to make huge monies out of this. On the contrary, in terms of what we've estimated, we've set aside a certain amount of funds, which I can't disclose to you, to support that in the initial years until we have the critical mass. That's the first issue. Secondly, and more appropriately at this juncture, perhaps I should mention it as well, that we are setting up a work fund here in South Africa, okay, which we will contribute a certain amount of money in that work fund. I'm glad to say it was Bright's idea to set it up, and so they will contribute a certain amount. The proceeds thereof of the work fund will be used to pay for contributions for the needy and poor. Okay, so that's our initial contribution to kickstart it. Yes, the Takaful and the Takaful will be done jointly by Bright and ourselves, and hopefully it works. But at the same time, to kickstart this, we will have the work fund in place, and of course the OCAF Foundation will help us set it up and dot all the I's and cross the T's, so that we have a certain amount of pool to use to contribute towards the poor and needy who will be absolutely destitute. Your organizations that you represent may not have the money to do so, so we will arrange that. So it is an all-encompassing and an embracing, let's just say, venture. We have tested these in different ways, as my colleague Hania has mentioned, but we haven't tested it in South Africa. There are no statistics on this. So we are looking to our international perspectives. We've tried to price it as efficient, I would say, as possible, because affordability is a huge issue. I would just want to add, and going out of the micro Takaful, the intention is also, and I'm speaking with due respect here to our ulama as well. We, in our rudimentary research, have found that unfortunately the ulama are not covered for these eventualities. They also have families, okay? And we felt that this has to be extended. Of course, this is not to be mixed with zakah funds. There have to be other funds on that, but there's a dire need for that, okay? And then when we expand that further, we also find that in the South African market, we have conglomerates and corporates, whether they are particularly in the Islamic sector. We felt that there's group life requirements on a Sharia basis that should be included as well. Again, that one is a more business venture, but they all stem from the same type of underlying foundations. So yeah, it's not an advert for this, but we are trying honestly to create the foundation, the traction for this to succeed. And if we succeed this, inshallah, we want to roll this out into the whole of sub-Saharan Africa, into Africa, because the model can then be tinkered to suit the needs. Our brother in the second row asked, how quick will we be able to pay these claims? And I think perhaps at the back of your question probably was the fact that what happens if we have a funeral and people are in dire need for the payment, to ensure that within a day or the next day the funeral is done. And we know in South Africa we do it almost immediately. We want to make sure that payments are done on the day. So we have to perfect that as well. And we will be talking together with Bright how to do that, even if it's an interim payment, to alleviate this need immediately, because it is the need that we want to cover. And if we do not cover that, there's no sense giving you the money 6 months later. Remember, we said that the Takaful at the outset is to help each other. That's the precept and the concept. And therefore, what do we do as an organization? We pool the 200 that each person is paying into one pool. And that pool belongs to the community, not to the company of Hanover. It belongs to the community. Out of that, whenever there's a claim, we will pay it from the contributions in that pool. And to answer your question more directly, we have in the pool 1 million units of contribution. We have a claim of 3 million units. First one, okay. The 2 million, we jointly with Hanover and Bright will pay in the 2 million into the pool to pay that claim. And in the future, we will reclaim that when the pool is much healthier. So this is not even to do with the Takaful concept. It has to do with the regulatory environment, which has to ensure that the last man in the pool is paid in the eventuality of a loss. And these are the, let's say, the guarantees that's why we need the Hanoveries, the Brights, because when there's a flood of claims in the pool, somebody has to pay them. There will not be enough money in the pool to pay all those claims. So we do that. And then over the future years, inshallah, we will recoup. And if we don't recoup it, then that's fine. That is our contribution towards this development of the product. But the point here is that if we have the akhlaq correctly and the understanding and what we're going, alhamdulillah, I assure you we will be successful. We will get this off the ground, and hopefully the pool will be profitable. Just to give you an aside, we have been, and I'm talking of the family pool, we started it in 2007 or 8, Anya? 7, yes. Alhamdulillah, we are paying surpluses to our cedants, which are the Takaful companies. Any surplus in that pool is paid back, okay? So there has not been a deficit, the one that you worried about, purely and simply because, okay, we do risk management, etc. But we are doing it correctly, inshallah. We have the help of Almighty in this sin as well. That so far, alhamdulillah, for the last 6 years, we've been paying surpluses back, and our eminent Mufti Kalim is directly responsible with Mufti Manju to check that that is done robustly. So inshallah, with your du'as, this will continue. This, and in any case, this pool, the one that we established, will be part of that pool which is already viable. Do you understand that? In other words, the South African pool, we will put it into a pool which is already healthy, so that we will support each other. So the community spirit is already entrenched, and inshallah that will go forward. On a more actuarially based issue, yes, if the premiums prove over a few years to be totally inadequate, we will adjust, okay? But we are not going to pull the plug on it. There's a big difference between adjusting and pulling the plug. So these are the two, let's say, equilibriums that we have. Okay, let us take the example of we have 1,000 members in the pool to start off, okay? 1,000 times whatever the premium is, my maths is bad, let's say it's 100, so what's 100,000 or 200,000, whatever it is. Okay, that's in the pool. Out of that, we invest that as well, of course, Sharia compliant, so it generates some income for the pool, and we will pay claims out of that, okay? So in the eventuality of this 1,000 pool running dry, is that what you worried about?
The kind of premium that would have to be paid, you mentioned how it will be paid as well. The initial kickoff with this particular model.
Yeah. Okay. First and foremost, we have tried to price this as accurately as possible and discounted that for the fact that it's micro takaful. That we've done internally. Okay. So we've priced it and we said, let's say the price is X normally, with normal mortality, but we felt that because this is in the interest of the poor, we discounted that. Okay, so we know that the price that we're going to charge is not, let's just say, commensurate with market-related mortality. Okay, but that's fine because we want this to kickstart. We've set aside a certain amount in case this, the difference between actual actuarially evaluated and the one, so we will fund this. So that will ensure that it goes on. Now, what's the trick? Let's say we have 1,000 now. Inshallah, we have next 5, 10, 100. That's where, as Hania says, the law of large numbers will start triggering. The higher the contributions, the lower the frequency will. So initially, in the initial years, we will have high frequency in that. But as the pool grows, the frequency relative to the contributions will kick in, and that's what we have in our pool. Okay, as I said, we're writing about 2.5 billion so far, of which roughly half is about on the family side. Yes. Yeah. So about 1.5 billion is only family business, which means this. So there is a pool already. So any severity one we are capable of handling within the pool, within our existing pool already, and therefore that will ensure that we don't readjust the premiums until such time it becomes totally unviable. Okay. So yeah, rest assured that the pool is in such a state that we are able to compensate it. And again, it comes back to the concept of takaful. We are taking this from South Africa, but we are putting it into a worldwide pool which we have established already. So there again, we got the law of large numbers. Malaysia will turn out to be great in mortality. Saudi Arabia will be great. God forbid, South Africa has a bad mortality run. It's fine. We have two big ones supporting this initial initiative. You know, the aim, and I don't want to sound philanthropic on this one, the aim is to get this off the ground and get the needy into the system. And once that is, it will have its own momentum. You know, the example that Hania gave in Jordan, it's similar to the experience Mufti Kalim told me about the Grameen Bank. You know, micro numbers, you know. And once the confidence starts going, you know, we want to honestly, we want to make money on the other side. That means on the suit and tie guys like me, you know, who have to pay the proper premiums and the mortality. Yeah, exactly. So this will be subsidized by the proper mortality ones that we do individually. As Hania says, they go for medicals, they got diabetes, your premium is loaded by 100%, all the good things. But on this one, yeah, there is no discrimination, you know. The discrimination on this one is only that you must be in the LSM, which is needy. Simple.
Part of today's proceedings is recognizing, honoring, and appreciating those who have been brokers who've been with Bright in Takaful over this period of time. And in order to do this, I'm going to be calling on the CEO for Bright, that's Mr. Edwin O'Neill.
It's a wonderful privilege to be here today, and I'm so excited to see so many of you coming out and supporting us. A heartily welcome to each and every one of you, but in particular our colleagues from Hanover Re and the Sharia Compliant Board, from representatives and guests from Hanover Re, the Takaful South Africa Board, our very, very loyal and supporting brokers. Welcome. And each and every one of you who've been supporting the Takaful product, who work in the organization, as well as the Bright colleagues. It's indeed a true privilege to see how this product and the solution has made such a success in this market and with Bright over such a short period of time. It was 2015, December, when Sadiq came and spoke to us about a possibility of investing us. And we jumped onto that opportunity, and I look back very fondly of the success in such a short period of time. But for that, we always need to be humble, but always need to recognize that there are a number of people that worked very hard. And in particular, I think it's in our interest, and just for a moment, to say thank you to Sadiq for doing a wonderful, wonderful job. So we've committed as Bright to continue to invest in this opportunity, to invest in growing product, invest in growing our markets. And today we're hearing about the life opportunity and to grow into that specific area. But it is with great joy that I'd like to announce that we received approval to do the Takaful product from the regulator in Botswana on Friday. So our colleagues in Botswana, congratulations. You can now start trading. In line with our investment and in line with the direction in which Bright has committed, we're super excited to be part of the fund that we're launching in the next few weeks and months, and in particular, this group family product. So from Bright's perspective, we have agreed to make a contribution of 500,000 Rand to kickstart the fund. But some of our very good colleagues and long-standing friends are in the room who do work for large banks. The challenge is now out to you to match Bright's contribution. And so we look forward to the large South African banks joining us and making this a real super investment and having this go. So ladies and gentlemen, it's just a very short thank you to each and one of you. Thank you for the brokers. Thank you for those clients that keep supporting this proposition. And please remember, Bright's motto is to approach risk with purpose. And when you approach risk with purpose, you're covering people's businesses. You're protecting their livelihoods. There's an emotional connection, all right? We stand by our clients in times of difficulty, all right? We put them back in the position once there's been calamity, once there's been fire, once there's been theft or damage. And we've done that successfully for many, many years, being loyal to our promise. And that is critical, and we will continue to be loyal to that purpose for the years to come. So for the questions that got asked about how do we fund this life proposition, we will stand behind it, together with our colleagues from Hanover who are protecting us. Together those two will do the right thing to protect the clients that do need that protection in the time when there's a death. So at that note, I'd like to thank you once again, and I think there's a moment that we'd like to recognize a few of our supporting brokers. Thank you.
I'm going to share the names of the top 10 brokers for 2018 for their loyal support and partnership with Bright, and Bright naturally looks forward to this continued partnership. Mr. Edwin will be doing the presentations to them, and Umair will be assisting.